traders, and welcome to the technical analysis market wrap on the 18th of June. So we finally saw the big moves that we've been waiting for this week. We've seen some really big moves on some of the majors and to a lesser extent on the indices. So there's plenty to talk about, so we'll jump straight in and check it all out. So we'll start out here with the Aussie USD. You can see that the big move happened. It broke through the 77 zone. We expected it to get to the 76 with no problem. It certainly did that. Did it basically in one candle. Came down and tested the 200, which is probably the last line of defense for it, really. I'll draw a line there in a second, but as you can see, it had a bit of a resurgence from this point here, and then it came down. So if you take it down to a smaller time frame, like say a 4 hour and a 1 hour, you can see it in a little bit more clarity. You can see that it actually hit the 76. That was your exit, of course. And then it did rebound a little bit, very shallow rebound, and then down she came again, big push down, and has been able to push 50 pips past that. So it really ignored the zone. It certainly stopped there, but it's ignored the support that it was going to should receive there. But I think that's probably a story of a lot of the big moves right through all of the other currency pairs. So I guess there's no real surprise there. So we'll pop on to the daily. We have very clear support here of the 200 moving average right there, and also if we do a horizontal line, it really matches up with the absolute stress zones that we'll put through here. Just a very minor touch, nearly a minor touch, and resistance here, of course, and a little bit of support there. So look, this is an important zone for it. 75.50 really is a pretty important zone. I probably think it will bounce back a little bit from here. I mean, if you're going to trade this, you're probably looking for a small time frame change of trend. It's probably 50 pips. I'm not 100% sure it's going to get back into that channel though. That was a pretty big move. I think it might find that it might weaken a little bit further. A lot of the big time frames are looking like it's going to be a bit weak. You can see here the MACD signal line is well and truly in the MACD, and I'm a little bit concerned that the histogram is still just dropping. So one to watch, but look, probably if you're looking for the trade, look for a smaller time frame change of trend. Any sign here in this area that is going to do a high low and aim for the 76. So it's only about 30 or 40 pips, but it could be a good scalp. But you should have been able to get involved in the big drop anyway, so hopefully you've been able to catch some really good pips on that on the way down. But yeah, the next one to be trading here is a bit of a change of trend up to this level here, and then start looking for shorts from that point onwards. Alright, the US dollar CAD is the next one that we'll look at. CAD, this has been a really good one. Shot up right through, broke that zone that we've been talking about, gave us a chance to get in, which was the most important thing. We certainly should have got in. If you weren't in there, yeah, I'm not sure what you were waiting for, because it was there for a while and we've been talking about it. If you did miss that one there, the pullback to the 20 moving average was your final chance really after that one. So you had basically another 2 days to get in when it did this candle here and touched the 20 moving average at the reversal zone, which is right through here. That was your point. If you missed that one, you almost never got a chance to get in again because it just kept going. Look, this is looking still really strong. It's already hit our targets. It's already gone the 180 odd pips that we needed it to do, but it's still looking very strong. I'm not inclined to long it any further from here until it actually does pull back a little bit. I don't like things that are going up vertical or jumping in on things that are going vertical. So ideally, we want to see it pull back to at least some of the moving averages into this. Now, even if it was just this zone here, it just needs to do something. It needs to come back and show some sort of consolidation. But the MACD is very strong. Like the power of this one is very strong, and it had been building up. It's not like we weren't warned. So it was building up, and then when it did explode, it went very quickly. So hopefully you were able to get involved in one of these two candles, that one there or that one there, and you could have even made a case for that one there. There was 3 days of entry on this one, so hopefully you were able to get involved in that. Target's already reached. You should be already out if you took those trades. And again with this one, just wait and see, let it pull back a bit, and then maybe look for the next target, which is probably around that 124.50 area, which is this support zone here. It's right through here. Not very far away at all. Alright, we'll move on to the US dollar yen. This one has been, look, this has been pretty good as well. This has gone, maybe not as fast and as exciting as the other US dollar based pairs, but it's still there. Still grinding away at its higher highs and higher lows. It hit the target that we set for it last week. We wanted it to get to 110.50 or 60. It did that, no problem. It's found resistance at the exact same spot it did last time, way back in March. So we're not really surprised there, but this is still trending, okay? There's still higher highs, higher lows being formed. It's just really a bit of a wait and see as to whether it can actually crack that new high. If it does crack this new high and closes above it on a daily, it's going to have 112 in its sights. So 112 is probably its next real target. It'll get there too if it breaks that. If we get a high above this close here, through here, you can bet your bottom dollar, 112 will be where it wants to go. And although it's only 100 pips, it's still pretty reasonable movement. I like what the yen is doing because it's moving in a very orderly fashion. It's not doing anything that's overexciting, but it's still grinding higher, and it's not really letting us down from a technical standpoint. So very happy to see it doing what it's doing. I don't mind that it's pulled back a little bit, even though the other ones are out of control. And all this leads to is hopefully a little bit more consolidation around this level here, which is a bit of a top test. So a bit of a roll reversal. So that's what I would like to see. Pull back to about the 20 moving average in this level here, which is probably about 110. The 110 will get the job done, and then you can start looking for long. So you look for the change of trends on the smaller time frames, and then off you go. But if you go to the smaller time frames on the on any of these, you can see that you got your opportunities to get in right through those moves. You can see that all you're doing is trading the 20 moving average pullback. Did it twice. You had two good chances to get in on that big move from pretty much 109 all the way to 110.50. So it's been a really good trade. All right, move on to the dollar index. The all-important dollar index has also hit our target. It's been a big week for targets this week. The 91.80 was the first thing we were targeting. It got there through the US session last night. You can see the strength has just absolutely exploded. Very similar to the CAD. We had a big consolidation zone at a very important level, and it did finally break through. And when it did break through, off she went. This is pretty much the target we were aiming for, 91.80. I'm not so sure it's going to finish here, but I think it's going to start losing steam here. Okay, that's the only thing we've got to be mindful of. This is driving the US dollar strength, of course, for the other base pairs, so we know this. The euro is going to be the one that's impacted so much from this. We'll have a look at that in a second. But as you can see, it's trying to break through the 200 moving average, which, short of a miracle, will do that on this daily candle. The MACD is looking extraordinarily strong on this as well. So realistically, there's still probably a lot of power here, but we want to see a bit of a pullback to actually equal out the move. We want to see the consolidation happen so it doesn't get overextended, because when things get really extended, they often rebound very sharply, and we don't want that because that makes it hard to trade. What we want is the easy trade. So ideally, a pullback down to this level here, which is about the 91.20, would be ideal. That would be a great place for it to come back, reload, look for a small time frame change of trend or pattern in the direction of the long, and then go again. And I could easily see this going to 92.50 and maybe even reach these highs around here at the 93. But really good, powerful movement. The euro is the next one we're going to have a look at. This has been a really good trade as well, because I think it gave us the opportunities that we needed to get into this. I thought it was short when it was actually doing this around through here. You can see these indecision candles underneath the 20 moving average was holding price, but more importantly, you could see that the pattern was starting to weaken. Yes, it had strength there, but it was starting to round and weaken. The highs were failing every time. You can see the big wick candles here, all failing. So when it did break through, the 20 came back and tested it. That was your entry point, and you should have been short from there. The rest of it, well, once it broke the 120, the 120 was a target, the 200 moving average, and the 120 was a target. All this was a bonus if you traded it. My personal thought was the 120 target was the main thing that we were aiming for. It got there extraordinarily quick. It's in a bit of a strange zone now. It's pushed past the 100 now, so it's down to the 119. So good level, but it's probably going to start finding a little bit of mess now. I don't know if the trading is going to be as easy. The dollar index still looks really strong, but a dollar index pulled back to about 91.20, which is where we saw on the previous chart. They would see this one pulling back to probably 120 around here. So I'll pull back down, or pull back up, sorry, to the 120, 200, test it from here. So basically, what we want to see is a bit of a reversal, test this level from below, and then look for the shorts. And then the shorts, now that it's gone to 119, I pull back to the 120, change of trend on a smaller time frame, and a short pattern like a double top or something like that on a 15-minute would be ideal, because you've got a very clear target. The 119, now that it's been tested there in recent time, it's going to be a very logical target when it reverses from here, and a good chance it'll push down into the 117s. That's what it looks like, because the dollar index looks very strong, and this one will probably follow suit down to the 117 if it fulfills its destiny to 93 on the US dollar index. Alright, we'll have a quick look at the S&P 500. This has been one interesting. It's holding. Like it tried to push down. This candle really reversed up to the 20 moving average again. As you can see, it's closing well above it. It's pushed into the 42.23 level. So given what the currencies are doing, this is probably being really well behaved, I thought. The 20 moving average has done its job again. It's tried to test it and it's pulled back above. That's quite a bullish sign for it. I want to just wait and see on this one. I just don't think this is good trading. The S&P 500 is just not giving us good trading signals at the moment, because I think the directions are very small. When we've got big currency moves like we've seen, I think a lot of the good trading is happening in the currency markets more than this. So one of those ones where you're going to find resistance only 20 or 30 pips away, and underneath the 20 is proving very strong to break. So a clear break of here and a close below the 20 moving average, then you can start looking to shorts to the 41.30. You need a daily close below this 20 before we can start shorting to the 41.30. If you want to scalp, the scalping opportunity is going to be on a change of trend and only go to as long as where it's been, which is about 42.50. Okay, that's about the only target you want to be aiming for at this stage until it actually has a clear break. So very small range. If you like it and you want to trade it, it's okay, but just wait for the clear signal of a break below the 20 if you're going to go short. All right, the final one we're going to have a look at today is gold. Big sell-off. As you can see, it went through all of the key zones. It's amazing when you have these key zones drawn up, you can see it touches it and always respects it. Then it went back up again and came back and touched the new zone. Gold can do this. This is not a surprise. It was looking really weak up here. Very weak. It had a very strong trend line, as you can see. The giveaway for this trend line to fail was that this did not make a new high. So this, even though it was a validated trend line, it was a very weakened trend line at this point right here when it failed to make a new high. So no one had any business actually longing it from here. So I certainly hope you didn't get caught longing on that trend line, because we would never do that, following the rules that we always follow. And consequently, it fell through and just absolutely capitulated from there. So look, don't be surprised when gold does that, because when there are big moves, this can happen really easily. It's definitely found support at this level here, which is 1765. Is very strong support for it, but it's one of those things where if it rebounds, it's probably going to, I don't know if it's going to be a V-shaped reversal on this one. Gold very rarely V-shaped reversals, so it might be just a bit of a slow grind back up to those levels, but the big weakness has already happened, so I certainly hope you didn't get caught up in that. But if you want to have a go at the long, this is a support level, so look for a change of trend on a smaller time frame, telling us that it's going to have a bit of a momentum shift, and then maybe start scalping up to the levels that it did break through. So I hope everyone's had a great week's trading. We've had some really good opportunities, and it was good to see the big moves finally come through from those key levels that we were talking about. So hopefully you were able to catch up on some of those. Just be mindful now that some of the big moves that happen, so there could be some rebounds. Keep your trading probably to a scalping level. Look for those scalps from these key levels, and just don't be too greedy. It pays not to be too greedy after big moves, and let the trend settle in and then continue on next week, and then we can start again and look for those key entries to get the bigger moves. Thanks everyone, and have a great weekend.